It's another month, and of course on this channel we are looking into 3 top stocks or top 3 investments that you can do this month, February of 2020. Now if you saying 2020 is your year, it will be mine too, and therefore let's roll.
Wolf of Dubai.
The first one is something a little bit more than just a stock. Now I want to emphasize how important this investment can be for experienced investors, but also for beginners of investors. Now I believe that a good and a top 1 investment in February 2020 can be in the S&P 500 index fund. Now this is a kind of basket of the 500 best companies of the US stock market, and therefore also you are betting for the US economy, which is #1 economy in the whole world. And also this S&P 500 moves along the market, so actually it's like the average of the whole market, and it's on average over hundreds of years of history it grow 10% per year plus some dividends on top of that. So you can be sure that in the next couple of years that this is an interesting investment to consider. Now this means also that if the market or some stocks overperform this market, then this stock basket, let's say the S&P 500, will be maybe less than the top stocks, but also if the worst stocks are going way down, the S&P 500 will not go down that much. And also during the financial crisis of 2007-2008, the S&P lost about just 50%. If you consider that how much it went up over the last couple of years, 50% is still manageable. If you consider other investments rather than stocks, for example, then you can imagine that if you can invest, for example, in a business, then of course the potential is also much bigger, but to 80% of all startups fail and all your money would be gone. Now let's dive into the performance of the S&P 500 just to show you how potential this is. Now if we are looking into the performance since 2010, so the last decade, we can see that $10,000 actually became around $35,000 plus dividends on top of that. And let's dive directly into the product that I'm recommending here. Obviously do everything by your own. This is not like advice. I'm not like an official financial advisor, nor I get paid for that. So you should also make your own decision based on this information that this channel is doing. And also if you like it so far, make sure to thumb up this video to push my channel for the YouTube algorithm to build this community. Now let's dive into the product that I'm here thinking is the best for you. Now this is the VOO, the Vanguard S&P 500 ETF. Now you are currently getting on this product a 1.9% dividend yield, and also the S&P 500 growth was about more than 30%, 31.5% last year. So $100 or $100,000 would be $130 or $130,000 respectively. So a good investment over here. The asset size is around 536.6 billion US dollars. So much money is invested in this product from all around the world. And the current S&P 500 PE ratio is at around 24. It's obviously over the whole bull market on the higher side, but still I believe this is a good investment vehicle to go inside investing currently, because you know going into stocks, the corrections, if we are going into corrections, can be quite significantly, especially in stocks that are went way up in the last couple of months and weeks. Now the stock basket of S&P 500 or the VOO product is containing 509 stocks, and therefore you have a good good mixture and diversifying product there from different sectors. You know, if we are looking into the characteristic of this product, we can see that, you know, the top biggest holdings are, for example, Apple, Microsoft, Alphabet, Amazon, Facebook, Berkshire Hathaway, JP Morgan, Johnson & Johnson, Visa, and Procter & Gamble. Now, therefore, if you're just buying this product, then you are owning partially a couple of those stocks, 509 in total, and therefore you don't have to worry about changing this and that. If a company don't have a specific metrics or hold specific metrics, then they will remove this company and put another company inside all automatically, and you can basically put this money into this product and leave it there for the next 10 years, and with very high probability it will be much more money. Now, the next stock in the top 3 stocks to purchase in February, obviously we cannot miss Tesla. Now, just to dive into the numbers, the Q4 earnings just crushed every expectation out there. They made $386 million profit. They have a new record of cash, $6.3 billion. Now, this is very important because some people don't understand that as faster Tesla is growing, as faster this cash pile is building up, because they are getting paid by the customer and they have to pay suppliers just after 60 or 90 days, and therefore the cash gets bigger and bigger and bigger and bigger, and they can make a lot of things with this cash. And therefore, as faster Tesla is growing, as faster this is growing, as faster the valuation of the company is growing. And we have seen that the positive cash flow is very important for growth companies. We have seen the same for Apple. We have seen the same for Amazon. Though Amazon was, for example, making losses over many years, the cash was always positive and during this time. And this I see the same in Tesla, and therefore, you know, a comparison between Tesla and Amazon stock or Tesla and Apple stock is very reasonable here, and I believe that Tesla stock can even outperform Netflix, Apple, or other growth stocks like Amazon over the next couple of years. Now, if we are looking into the value, we are already at $170 billion. I just remember, as it was yesterday on this channel in the summer, we were talking about $36 billion, $38 billion. I even make a comparison between Uber, that was double the value that Tesla, and in just 6 short months, and huge success by Tesla, their current value of the company is double the size than Uber, and Uber is currently non-profitable, and therefore this is quite funny to see on the stock market. Anything can happen. Now, the PS ratio is currently on the higher side, 4.63. Nothing crazy yet, still aligned with other PS ratios around growth companies like Amazon. I'm not worried about that at all. The valuation for sure Tesla need to deliver now, but if you consider where the stock will be in 10 years, in 5 years, then I think you can still buy easily at those levels if you are thinking long term. If you are thinking short term, just want to make the buck, then you need to be very careful, because, you know, it always can happen that the stock just make a short correction, you know, 10-20%, and then goes to new highs depending on the overall market, though we have those bad news about the coronavirus. So you can be a little bit cautious here, though the stock itself on Friday showed us that even in the bad market environment, the stock raised just as other small strong trading stocks. So therefore, you know, you see how the stock want to go up further. And the things that I'm really looking forward to in February will be the Model Y, when the first Model Ys will be taken apart and to see the engineering masterpiece behind that. And also China is very important for the next couple of months and to be watched in February because of the bad news of the health crisis, and also of course how the production can be run and also ramped up as soon as possible, though we have this negative news about this thing. So definitely a buy in February, and let's dive into the next and final stock to buy this February. Now, I have told you already in the last couple of months that Amazon is a strong buy for me because Amazon has a product that grows incredibly fast, and also they crush all the competition, and they are very customer orientated. Now, if you consider this, companies can be very customer orientated, can be very successful because the interest of customer and company are aligned. And for example, if you look into the car companies, the traditional car companies, they want to sell as much as service as possible, and the customer want to make as less service as possible with the cars. And therefore Tesla, for example, is more aligned with the customer orientated and customer goals than the traditional car companies. And therefore I believe companies like Amazon, like Tesla, can be very strong here, aligned with the customers' goals. Now, if we are looking in the EPS of the Q4 earnings that just crashed all expectation, it was 6.47 versus 4, and this is huge. This is a huge beat on profitability here. Whatever analysts said, it was totally wrong. And revenue of unbelievable $87.44 billion. A huge Christmas season, the best we ever saw. A revenue growth of 21 with this numbers is absolutely insane. The value of the company is approaching again the $1 trillion mark. And one of the most interesting things about Amazon was the transition from e-commerce to building a second biggest product, which was the AWS, the Amazon Web Service, which is basically holding the majority of the internet. But on the other side, there's a new product already on the horizon with the advertising. So you can imagine that if you're buying something on Amazon and you're searching for something, Amazon is so huge that I believe that after Google and after YouTube, which is the second biggest search facility, Amazon is the third biggest facility after those two. And people are searching about things, and then they allow to book advertising there, and the advertising revenue was already $4.1 billion. Now this seems to be small, but it's still about 5% of the overall revenue, and it's growing absolutely insane with 41%. And therefore I'm watching this very closely. This can be the next big product for Amazon, and also the growth potential is not stopping, and therefore Amazon is a buy. And you also see that on the profitability side, Amazon was strong because they invested a lot in shipping to make shipping a beautiful thing, experience for customers, and this paid off. And the other thing we just talked about, advertising, is the thing I'm very excited into the next couple of months. Therefore, Amazon is a buy too.